Hey folks, welcome back to the Edupedia world, and I am Abhinay Gupta. And today again we are continuing with the producer company. So in the previous lecture, if you remember, we had covered about the details of the company secretary, right? When are they required and what does the law say? And at the end we came to a conclusion that the law has merely given a guideline, although there are penalties, but they're not very stringent. It can be easily waived, right? Then apart from that, we have also discussed about the shares, that they have equity shares and how are these shares transferred, what is the percentage of shares that is based on patronage and a lot of things. I hope the topic is very clear with you, right? So today we move ahead to the next part of this chapter. So now we'll discuss about the finance, accounts and the audit, which is related to the producer company. Right, so for this we will be covering sections from 581ZE to 581ZJ. Right, to start with, we start with section 581ZE, which talks about the books of account. Right, so what are the various content of the books of account? If I say that the producer company needs to have their books of account, then what does book of account constitute of? Right, so since they are into trading, right, they are into production and they are into trading and selling things in the market. So the first most important thing is to maintain a register, right, whereby all forms of money which is received and money which has been expended needs to be recorded. Right, so all the sum of money which is received by the producer company and which they have expended on trading specifically, right, all these things have to be recorded. Apart from that, all the sales and the purchase of goods, right? So they purchase goods from the producer, they sell it off into the market. So whatever is the documentation for these purchases and the sale, all needs to be documented in frame. So they will have a separate book for this, right? So all whatever they receive, whatever they spend, all the kinds of receipt and expenditure are in place, plus all the selling and purchasing of those goods, right, that they deal in, has to also to be recorded separately. Right, now then if they have any instrument of liability, right, which is executed by or on behalf of the producer company, so you know what a liability is, right? Like at least the accounting term of liability. Real world liability is a different thing, let's not get into it. In the accounting term liability, so if you have any instrument of liability, you remember we issue those shares and we issue some other instruments which give special rights, even that can be a liability at times when you have to pay it off, right, or you have taken loans or whatever kind of thing. So if you have any instrument of liability that has been executed by or on behalf of the producer company, please keep a separate note of that. Right, then apart from that, obviously you have to have your balance sheet. That means you will have to have your register of all the assets and all the liabilities that you have. So remember, the other liabilities would come into the asset and liability section, but if you have issued any instrument, right, that for which you could be liable in future, those instruments of liability has to be maintained separately. Right, so receipt and expenditure and assets and liabilities are a part of the books of account of all the companies, right, but here sales and purchase have to be separately documented, has to be maintained. Instrument of liabilities also needs to be maintained separately. Now there's one more thing that we know is very specific in case of the producer company, right, that they are engaged in production, they may be engaged in processing, they may be engaged in manufacturing and a lot of things, right? So when they are into those operations, right, they would require material, they would require labor for the same, right, they would be manufacturing something out of something, they would be processing some raw materials, right, into finished goods, finished products, and for that they may also be using labor, right, and there are other item of cost as well that is required in their manufacturing operation, right, so they also have to maintain an entire record of all these things, right, so they have to maintain the particular relating to the utilization of all the material and the labor and the other costs that they have, that the utilization percentage should go high, there should be very less of waste generated out of it, right? So that is something you need to always keep in mind. Clear? So all these things form part of the books of account of a producer company. right? So what are the 5 things? The entire account of receipt and expenditure, sale purchase of goods, instruments of liability that has been executed by or from the through the company, all the details of assets and liabilities, and the utilization of the material and the labor and other item of cost, right? Now where is this book supposed to be maintained? This book of account is to be maintained with the registered office, right? So wherever is the registered office, over there you will have to keep the extract of or the entire books of account of the producer company. Okay. Next, we also need to understand the concept behind the internal audit of a producer company, right? Since it's a company, we get into internal audit, and a producer company is just like any other private company, right? So section 581ZF deals with the internal audit of a producer company, and but obvious it is to be performed by a chartered accountant, right, at such interval and in such manner as may be specified in the article. That's it, right? So you have seen that in a lot of cases basically the power lies with the article. In case of producer company, just like any other private company, majority power lies with the article, right? So here also the internal audit will be done by the CA, but how will it be performed, when will it be performed, and all those things, right? How many, at what interval should an internal audit take place? All these things will be specified in the article. The law does not say anything about that. The law keeps silent, says okay, you want to get internal audit done, refer to it in your article and abide by it. That's it, right? Because before registration even the article will be checked, right? So they cannot just go on writing anything in the article, so it has to be reasonable. Getting the point? So that is about the account and the internal audit of a producer company. So moving on, next we get on to understand the duties of the auditor, right? So the auditor shall report on the following additional matters. Now they talk specifically about the additional matter. Why? Because section 143, you remember, of the Companies Act 2013, yes, power and duties of the auditors. So that section will remain applicable on the producer company as well, right? So all the duties of the auditor, which is specified in section 143, will continue to be eligible in a producer company as well, right? But since it's a producer company, the operations are a little different, right? So the duties of auditor goes beyond what they normally do in any other company. So section 581ZG basically discusses about those additional duty that has to be performed by an auditor, right? So this says that okay, whatever is in 143 will be followed as it is. Additionally, these are few more things that the auditor is supposed to do, right? So in a producer company, the auditor will have to go ahead to report about the debts due, right? So whatever is the debt that is due from the producer company, for the producer company, and whatever is the bad debt also that accrues, right? These things have to be reported separately. And now when we talk about debt, it can be debt given to anybody, but these are debts that are due, and those debts that have been already converted into bad debts, right? So both these things have to be specifically mentioned. Apart from this, the auditor also needs to report on the cash balance that the producer company has, right, and any securities that they possess. So the verification of the cash balance and the security is also supposed to be reported by the auditor. Getting the point? Then the assets and liabilities that we have seen in the books of account, their details have to be specified, right? The entire breakage that breakup that this is the asset, this is the ownership, this is what we use. Apart from it, maybe it is shared, right? This is when the asset was taken up, or when it was built, whatever be the case, right? And how did the liability origin, what is the due date, and all those specific things. The entire detail of the asset and liability has to be specified separately, right? This has to be reported separately, because even in the books of account, when you see, then assets and liabilities are reported separately. So even the auditor will have to issue a separate report on the same, right? Now when we talk about part 9A, so part 9A is something that the producer company needs to comply with, and that overrides the entire Companies Act as well, right? So we will not get into the details of part 9a, but as an auditor, right, when the auditor goes on for the audit, right, so they'll see that is there any transaction which is in contrary to the provisions of part 9a, right? So if there are any such transactions which do not abide by the part 9a, then they have to be separately reported, right? So when we say all transactions which appear to be contrary to the provision of this part, means we are talking about part 9a, right? We have discussed about part 9a in the very beginning lectures, so we'll not take that up much because we're not getting deep into it. The only thing you need to remember that, yeah, if you are an auditor, then it is also your responsibility to report all the transactions that are not in accordance with the part 9a, right? Because part 9a is powerful, it overrides the entire Companies Act as well, right? Now if the producer company has given certain loan to its own directors, then that has to be reported, right? What is the amount of loan, what is the tenure of loan, what is the interest, all those things, the details have to be given. So the loans given by the producer company to the directors have to be reported separately, right? And if there are any donations or subscription which are given by the producer company, any kind of donations to anybody, right, or any kind of subscriptions made to any club or anything which is given or paid by the producer company, then that has to be reported separately by the auditor, right? And then at last there is a room given open for the auditor, that if there is any other thing that you think it needs to be considered or it needs to be reported, please go ahead with the same, right? So section 143 of the Companies Act 2013 anyways has to be followed by the auditor, right? But apart from that, even beyond, these are certain more aspects on which the auditor has to report: the amount of debts due, the verification of cash balance and securities, the details of assets and liabilities, all transactions which appear to be contrary to part 9a, the loan given by the producer company to the director, the donations and subscriptions given by the producer company, any other matter as may be considered necessary by the auditor. Clear? So that is only part about 581ZG. You do not have to go into the details of auditing because that is already covered in section 143 of Companies Act 2013, right? Now when we speak about donation and subscription, I know most of you are unaware of what are donation and subscription in case of producer company. You should be, because we haven't discussed it yet, right? So let us take that up as our next topic. So let us discuss what are donations and subscriptions and what are the limits on that, right? So section 581ZH will help us deal with the donation or subscription by the producer company. So first of all, what we need to understand and keep in mind that everything in the producer company, every damn thing in the producer company is always done by passing a special resolution. So you don't have to every time remember that whether it is a special resolution or ordinary resolution. Everything in the producer company is done by a special resolution, right? But only when the bonus shares are to be issued, an ordinary resolution will do. That is the only exception. Otherwise, everything in this chapter will be done by special resolution. Keep that in mind, right? So even when you need to give away some donation or subscription, right, you will have to pass a special resolution. That is very simple, right? Now, what is the total amount of donation that you can give? Doesn't mean that, yeah, if you can pass special resolution, then you give away everything that you earn, right? There has to be ceiling, right? There has to be maths in place. So the aggregate amount of all the donation that you are making, right, or all the subscriptions that you are taking up in any financial year should be the maximum limit of 3% of the net profit of the preceding financial year. So last year if I made 1 CR profit, this year 3 lakh is the maximum amount of donation or subscription that I can make, right? So in the beginning of the year you already know that, okay, last year's profit is this, hence this year's maximum limit for donation and subscription is 3% of the previous year profit. Okay with that? And we're talking about net profit, not gross profit. Keep that in mind, right? Now one more thing, that whenever you're making this donation or subscription, whatever you're doing, please make sure you're not making any donation or any subscription towards any political party, neither directly nor indirectly. right? So a producer company is prohibited basically from making any donation or giving any subscription to any political party. So you cannot make any political contribution, in short. The prohibition will also extend to any contribution or subscription made to, first of all, the political party, right, or to any person for any political purpose. That you do not make a donation or subscription to a political party, but you have given some donation to certain person who will finally use it for the political party, right? So that is an indirect donation or subscription to the political party, and even that is prohibited, right? So whomsoever you're giving that donation or subscription, make sure it is not being used for the benefit of any political party or for the promotion of any political party. Correct? Now when we talk about this donation and subscription that the producer companies give out, right? So what is the purpose for which you go out to give this donation and subscription? There has to be purpose, right? So the basic purpose of giving out this donation could be promoting the socio-economic welfare of the producer members, right, or the general public. See, understand, you are a producer company, right, where a lot of producers, they have come together for the common interest. They're okay, we are producing things, let us build up a company, we'll bring it together on one platform and start dealing. So we'll start managing this, right, and we'll take it up in a more systemized manner. So when you are making certain donation, you can make certain donations, right, but that should be to promote the socio-economic welfare of either the producer members or the producer's general public, who are not even the members. Even for them, if you want to work, you can work, right? And second is to promote the mutual assistance principle. This is the principle on which the producer company has always operated, right? In the very first or second class, we have discussed about the mutual assistance principle. So we'll not take that topic ahead now. If you want to understand about the mutual assistance principle, please go back to the initial lectures and read it from there, right? Because we have lots to discuss more. So that is all about the donation and subscription. If you want to make, you can, maximum of 3% of the previous year's net profit, and no donation or subscription should be made to any political party, right? Now there are basically two more things that we will be covering in this class when we are talking about the finance, accounts and audit, right? So let us talk about the general reserve. So general and other reserve by section 581 ZI, right? So what are these? How do we deal with them? So this is again a unique concept in the producer company. So generally, you know that, yeah, you are supposed to make the general reserve, right? How do you make the general reserve? So whatever money, whatever amount, whatever quantity, whatever time period you want to decide, you decide with respect to the article, right? You know, article is very powerful in case of producer company. So the entire details of how the general reserve is to be prepared, how much is the contribution that is to flow in per annum, what is the percentage, right? How much is to be saved for what, and what are the other reserves that are to be maintained. All these things are discussed by the article, right? So this is an additional reserve that has to be maintained according to the article. Other reserves that you make for any specific purpose will always be there. This is a general reserve that would be used in any other field, right? So if the producer company has insufficient fund at any point of time, because general reserve is a compulsion to make. If article says it is to be there, means it is to be there. So in any particular year, if any producer company do not make a lot of fund, right, they do not have sufficient money to pull in to the general reserve, then they go out to their members that, yeah, maybe there's 10 lakh that have to go in, you have 5 of you, right? So as per your patronage percentage, right, please give in the deposit to the general reserve. So the members, they pay in to maintain the general reserve if the company do not have sufficient profit, right? And always remember, when we have these benefits or these liabilities coming up, basically everything will depend upon your patronage percentage, right? Doesn't mean that, okay, 5 members, 10 lakh is needed, 2 lakh each, and then we see that patronage percentage of one member is just 5% and the other is 90% and the other share the 5. So that is injustice, right? Person who is holding 90% patronage in the company will also give 2 lakhs, and the person who is holding just 5% of the patronage also gives 2 lakhs. He has only 5% share, right? Makes no sense. So even the contribution to the general reserve in those cases where the company do not have sufficient fund will be made in the percentage of the patronage. Correct? That is all about general reserve. Next and the last topic that we will be covering in this lecture is the issue of bonus share. Bingo. one point where OR is needed instead of a special resolution, right? So first of all, what do you think? Who should be deciding the bonus share? Obviously not the members, right? So the bonus share will basically be recommended by the board. So when the board thinks that yeah, it's time, we are performing very good, we have sufficient surplus fund, and we should be giving out certain bonus to the members, then the board would recommend the issue of bonus share. And now, do you think special resolution is required for the bonus share? Obviously not. The management is pretty sure that okay, we are in a position to give away the bonus share, so why wouldn't the shareholders want it, right? But the management cannot give it that way. They will have to pass a resolution in the general meeting. Now when we talk about a resolution in the general meeting, it always is an ordinary resolution. It is not a special resolution, right? Second, the general reserve that we were maintaining as per section 581ZI, right, that can be capitalized by issuing bonus share. Okay, so when you issue bonus share, you can issue bonus share from this general reserve that you maintain, right? Now, how do we decide how much bonus share is to be given? In normal company, how do we do? Maybe 1 share per 10 share, like a kind of a ratio. So over here also, we will give away bonus share in proportion to the shares held by the member as on the date of declaration of the bonus share, right? So when we are declaring the bonus share, whatever be the percentage of share I'm holding, I will get my bonus accordingly. So if you read the text, the board recommends and the members approve and issue bonus share by capitalization of amount from the general reserve. That is all about the bonus share, right? So the entire topic of the finance, accounts and audit comes to an end over here. We know what are the books to be maintained, what are the additional duties of the auditor apart from section 143 of the Companies Act 2013, right? And there when we talk about donation and subscription, we know what are the limits and what are the donation subscription they make, what is the purpose. Then that there is a compulsion of making a general reserve. If company does not have sufficient fund, the members pool in fund, and out of that again you issue the bonus share. That goes back to the member again, right? Because this general reserve is an additional reserve. Whatever is the reserve which is required by the statute will always be there, but this is an additional reserve, right? And it is guided by your article and nothing else. Clear with that? So I think that will be end of the lecture today. We have certain more topics to be covered in this chapter. I think I'll take up more 2 to 3 lectures on this, and the producer company, the entire chapter will come to an end, right? Because these topics that I have covered are basically the topics that have been asked in your examination or that have been given in your practice manual and other places, right? Because there are other minute small topics which go a little complex but has never been referred in the past anywhere. So it's a discretion. The exams are on just rolling, knocking on the door. If you want to go ahead with those very minute and irrelevant topics, you can go ahead with it. When I say relevant, don't think that I'm judging those topics, right? The topics, maybe they may give you a lot of knowledge, but from the examination point of view, generally what you have seen that those topics have never appeared in the examination, plus they have no reference even in the practice manual or some other places. So they go to a little less importance to those topics, right? As for the topics that are generally asked in your examination or that may be asked, I have covered almost all of them, and there are just I think I'll take just 1 or 2 lectures more on producer company and the entire chapter will come to an end. Clear with that? So I'll see you guys back in the next lecture. Until then, this is Abhinay Gupta signing off. Thank you and bye-bye.